Yo, what's going on YouTube? Welcome back to my channel. I appreciate each and every one of you guys for tuning in. And in this video, I'm going to be going over the euro versus the US dollar, a little recap of how everything's been playing out for the last few days. There was a crystal clear sell opportunity that I'm sure a few of you guys have capitalized on last week. But let's just go ahead, let's dive into my computer and let's check it out. So here we're looking at the euro versus the USD. Right now we're on the monthly time frame. What I'm doing here is we're trying to identify where the market is ultimately going. Is it in an uptrend? Is it in a downtrend? What exactly is happening? Well, if we zoom out a little bit, you know, all this stuff way in the past over here doesn't really matter. I'm just showing you guys real quick. Overall, we are on a heavy downtrend. However, what happened when the market came down to this area? It kind of consolidated. And then you could also notice we had relative equal lows with money sitting below there. Then what happened? The market came below those lows and skyrocketed to the upside, breaking all these highs with all the money over here. So now we currently have a new high, right? And here's our low. Well, within this low, when the market pushed down to take the liquidity, we need to now identify that last down candle before the up move. It's this candle right in here. And as you can see, a few months back, we played into this zone 1, 2, 3, 4 times. Within 4 months, we played in this zone. So a lot of consolidation on smaller time frames before it ultimately shot up to the upside. So what you need to notice and identify right now is, okay, we had a high right here, we had a low right here. Then the market came up, it broke that high, and it created a higher high. Then the market worked its way down and it created now a higher low. So now we're going to ultimately expect a higher high. We're going to be looking for these highs right here to be broken. Okay, but our first target is going to be in this consolidation range. Okay, it consolidated for a few months, and what candle sticks out to me on the monthly time frame is going to be this candlestick right here. Why? It's the last up candle before the down move. So if I go ahead and I identify this candle, I'm going to do it from the wick to the 50%. Okay, this is going to be an area where we're going to take profit if we're in a long-term buy position, right? But as you guys can see, we have some imbalance over here to the left, right? So I would expect at least 50% of that to be filled, which it was. Boom, which is why we are experiencing some sort of a reversal as we speak. So expecting this to now retrace a little bit before it continues up and hits our first target, and then ultimately taking out the highs, we are now experiencing a reversal because the market came to at least 50% of that imbalance, and now it's reversing. And we also have imbalance to the downside as well. So if I mark this imbalance up, mark up that 50%, I will expect Euro USD to trend down to at least this imbalance and ultimately look for buy positions back up to the upside. So that's kind of what we're identifying right now on the monthly time frame. Ultimately, we have it going up, but are experiencing a reversal. So coming to the weekly time frame, we have just more consolidation. It's hard to pinpoint exactly what's going on with all these wicks. So let's jump down to the daily time frame. So as we zone in on this consolidation area, you can simply see what happened. The market was trending very quickly, right? And then it started to reverse. People were selling the market in here. Why? The market's going up, the market's starting to reverse. Everyone thinks it's going back down to the downside. No, took everyone's money because it shot up above that. Again, one more time, and then again, one more time. Guys, simply what I'm showing you is you have to be patient. You need to wait for shifts of momentum to create themselves, right? You need highs and lows. You need both of them to be broken before you really see that shift happen. So as we look at this consolidation range, I want you to notice once I go to a line chart where a shift of momentum took place, okay? Well, if we are identifying highs and lows in this consolidation range, we have a low here, we have a high here, we have a higher low, then we have an equal high, and then right here we created a lower low. the market came and traded right below the previous low. Then the market came up and it created a lower high, right? So now we're going to expect what? We're going to expect some sort of lower low. Okay, the shift of momentum happened right here, breaking below that low, retraced back up, and didn't break above the high. We now have a lower high, ultimately looking for downwards momentum. But understand that we're not just trading this just because the shift of momentum took place. Remember, this line up in here going across is that weekly 50% imbalance that filled, and now the market is consolidating. Now we're catching that shift of momentum on top of all that. See and notice all the confirmations that you will continue to stack up. So let me go ahead and clear some of this up real quick. Now what I want you to notice is before the shift of momentum happened, once these lows were broken right here, you know that this candle right here on the daily time frame was that last up candle before the down move, before it broke the previous low. So if we go ahead and I identify the open in the 50% of this candle, you will notice once it broke and shifted momentum, it came back up and played perfectly within that zone, which is where you would be looking to enter. First line, entry 1, second line, entry 2, stop loss above the previous high. So boom, you could have entered perfectly right there on the daily time frame. As you break that down to the 4-hour, you will see the market actually gave you 2 opportunities to enter into this sell position. Once when it came and it spiked up into here, and then one more time it came back into that zone beautifully for another entry. Now, if you missed both of those entries, no worries. You could have stayed patient and watched how the market played out. Okay, let me delete these. Boom. So once the markets traded off of this area for the second time, as you can see, it came down, pulled back, and you could have entered right here because this right here was that last up candle before the down move. You identified the open in 50% of that candle. When it retraced back up into here, you could have took that sell position right there with a tighter stop loss right above these wicks, boom, as the market traded down. However, there is still one more opportunity for you to have caught this push down to the downside. Once this first move happened to the downside, if I go to the line chart, you'll see it really clearly that we have perfect relative equal lows. So that tells me that there is a lot of money sitting under here due to the fact that we have relative equal lows and due to the fact that the market pushed up very quickly to the upside. So a lot of people were buying the market right in here, telling me there's a lot of money right in this area. And overall, since we're expecting a reversal to trend back down to the downside for a little bit, that's something I want to make note of. Now, as the market trended back up into here, you will notice we have another range of consolidation. So what we're going to do is jump down to the hour time frame and kind of evaluate what this consolidation zone is really doing. Now remember, over here we had that 4-hour institutional candle somewhere in this zone right here. It's very similar to this hour candle, as you guys can see, and this is where we played off of that. Now, since we played off of there, and this was that retest, off of that retest, where was the last up candle before the down move? It was this candle right in here. So if we identify this candle as our institutional candle, where we're looking to enter into the market and drag it into the future, we can see that this consolidation range played perfectly into our zone to take that sell position. But as you can see, it came in this area once, fell, came in this area twice and fell, came in this area 3 times and then fell. So why did the markets play in here multiple times before it really decided to tank to the downside and take the overall liquidity sitting down over here? Well, it's simply because the market needed to capture more liquidity. It needed to get more people on the opposite side of the market before they ultimately took it in the direction that they wanted to take it in. So if you look at this consolidation area that we have, you could simply identify that we have relative equal highs right here. And then the market came, and if you look at this wick, it just peaked over the previous high, but it never came above our institutional area. Guys, remember, when you're entering into a position off of institutional candle, right, your stop loss is going right above the previous high or previous low, right? So right above the wick, we're looking at about an 18 pip stop loss. Take profit's going to be down in here, about 110 take profit. So we had relative equal highs, getting people excited for the sell, but ultimately just continued to push up to take all the money it needed before ultimately tanking it down to the downside. So that's exactly what they did, and that's exactly why we always say trading is a transfer of wealth from the impatient to the patient. So you must stay patient. You must stick to your overall analysis. Don't second guess yourself. Study, 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 and feel confident in your trade ideas and watch how they play out. Don't over leverage. Don't do stupid things. Follow and stay true to your rules. And I am super excited to hear all of your success stories coming soon. So much love. Talk to you soon.